Hope everyone's doing okay. Good morning. Mm-mm-mm-mm. All right, so we're live in two places. We're live on Instagram, and I'm also live on YouTube. Hopefully, you guys are all doing okay. I'm going to talk about a couple stocks that I mentioned. If you were here on Tuesday, I talked about several things. I talked about a lot of stocks that I was interested more in long term, and I mean, if you were paying attention, a lot of those stocks are going to be up a good amount today. So I'm going to discuss those. So just as a recap, no gatekeeping. Going to talk about stocks a little bit longer term. I'll spend maybe about 5 to 7 minutes on that, maybe a little bit more, and then I'll also talk about scalping. I'll talk about a couple people that have been making. I've been getting DMs. I've been getting a lot of DMs lately, about 10 to 12 of them a day, on people saying that what we've been teaching them has just been working. I mean, it's just helpful. So I'll discuss that. Just give me 30 seconds and then we'll begin here. How's everyone doing? Is everyone good? Everyone okay? Okay, let's get started. So, a couple stocks that I mentioned on Tuesday. I was talking about TECL, and then I was also talking about TNA. So these are leveraged shares positions. Not everyone is going to have the stomach for holding on to leveraged shares, but I like to hold on to them only when they're severely depressed. So when I'm talking about a severely depressed market, I'm going to just jump into TECL real quick. If you've never heard of this, it's just a leveraged ETF. It's going to be 3 times leveraged for QQQ. When we have extremely depressed markets like we saw on Qs, right, from the peak to trough on this recent pullback. Well, let's not call it a pullback. Let's call it what it is. It was just a catastrophic crash. It's what it was. It's a 26% pullback. I like to look for positions like this to actually capitalize. And I think today probably is going to be where I'm a little bit up on my TECL position. So I took the position initially here before Liberation Day, thinking that this was going to be the quote unquote bottom. So that was my bad, right? But I added to the position all the way back down at $43. Right, so I averaged into the position. So overall, I believe that my particular average was about $46 or maybe $47. So right now, pre-market, we're at 58. Why do I like shares? Because with shares, I can take bigger positions. Options are okay. It's perfectly fine. Some people have the psychology to do it. I do, but also I don't want to see too much volatility in my portfolio. I mean, the leveraged ETF is already enough. Okay, so some people like to buy $20,000 worth of Tesla calls and then they ride the rally. That's okay. That's okay if that's you, but that's not really where I am. I like a little bit more stability where I am in my trading journey. So that's kind of weird for me to say because I'm talking about leveraged ETFs. So that's an oxymoron, it seems like. But on TECL, in my opinion, I was waiting for a bottom to be put in. The bottom definitively was 33.25, right? Something like that. So I've been recommending an indicator that it's not really new. It's more used on I would say the prosumer or professional side. Not a lot of retail traders use it at all. At least this is what I'm finding out. I like to use something called the CVD. It's called cumulative volume delta. So you've probably seen me talk about it on a couple of videos on Instagram or maybe even YouTube. I do absolutely love the indicator. I absolutely love it because I can see where the volume is, and I can also see if there is a substantial move that's being made on a candle by candle basis. So you see that right here on my chart. Hopefully you guys can see that here on Instagram or YouTube, wherever you're watching me. So the upside on TECL, I still think is quite substantial, right? I think that we can see from here we can see another 65% upside. So mind you, right? I took, some people might have taken my might have taken my entry at $43 for the first time. So if they do hit the target all the way up to, I would say, about 85 to 90, you're looking at almost 100% gain. Okay. That's what I was discussing here on Tuesday. Next, I'm going to talk about TNA. This is another shares position that I'm in. I got a lot of money in this position. A lot of our members do as well. So my average on this is about $28. So I'm still $3 negative, right? But overall, in terms of risk reward, I think that we can hit about $33 in the next couple of months, I would say. And then after that, I'm looking at probably a full-blown recovery back to 42 to 45. I usually get this comment, these trades sometimes seem very boring. They're position trades, or they're very long swings. But at the end of this, right, at the end of the rope, it's very beneficial. Also, if we hold on to these positions for longer than a year, there is usually a significant tax benefit. So I think about those things when I take my trades as well. For short-term traders, the capital gains tax it's criminal in my opinion, but that's nor here nor there. So on TNA, for those that, maybe have been jumping on these sessions and listening to me for a little while, I'm allocated in TNA, and I still think it's a healthy position to buy into. I'm going to talk maybe about 3 or 4 other stocks, and then we'll jump into the shorter time frame, and then we'll discuss any positions that you guys might be interested in. Some of you might be asking me about SMCI, maybe about Coinbase. I dropped the ball on Coinbase. I mentioned to my people in the Discord that I was just paying attention to other things, and Coinbase would have been an obvious choice. All right, so next I want to talk about something. Chat. I think Chat is still a really good ETF. It seems like it's going to be a boring ETF, but boring. I'm okay with boring. I'm okay with this being a little bit longer term. So I'm still going to recommend this ETF for people that want to hold on to a position for a good amount of time. That's NQ. Let me go to Chat. Okay, here we are. Right now, this is trading at $36. I called out, some of you might not remember, but I called out a sneaker company called On, right? On Cloud. I called that out maybe about 2 years ago. I said that was going to be trading at $70. I bought this at 25. Right now, it's trading at 48 because it pulled back with the rest of the market. But I called this out when we were trading at $25. And then it got all the way back up. Not back up, but it got to $64, $65. I took my position roughly around that area off, right? So I rode a lot of that wave. Did it take time? Of course it took time. There's no doubt. I think that Chat is going to be one of those things. I actually think that this is going to exceed all of my expectations. In my opinion, this trades up to $80, $90. This is going to be a longer term play, but I don't mind holding on to longer term plays, right? If you're worried a little bit more about some of the short-term volatility, I think that this is a really, really good hold. Okay. I think you know what? I probably should talk about this trade as well. I think SOXL also is a pretty good buy here. If you're considering buying it now, you're already almost 35% late. I signaled this trade at $9.50, something like that. So I had it at I think I had it at $9.50, something like that. Yeah, about that. I don't think semiconductors are really going anywhere. I don't think the current administration really is going to support policy for semiconductors. However, we still need semiconductors. If you saw Microsoft's report yesterday, cloud is still buzzing, and it's still going to be buzzing. I've been talking about cloud technology for years and years. I've been telling people you should be allocated in some sort of cloud-based company. Amazon, Microsoft, not so much. Microsoft, I'm not that, but I've been signaling cloud positions like crazy, like absolute crazy, right? And we did very well in 2024 for our cloud positions. So on SOXL, what are we doing? Just look at the top holdings, right? You have Oracle in there. Intel is in there as well, but Intel's not really worth anything. I would say this is pretty astute observation on your part. If you just look maybe at $12.50, if you set your stop loss at, I would say $10, I think that would be reasonable. But the upside on this is quite good. Okay, so be mindful. I'm telling you, if you're interested in the semiconductor space, you've already missed a lot of the upside here, a lot of it. I mean, the counter trend was at $10.50, and now you have support between $9 to about $10, right? So that's where I would set my stop loss if I do decide to take this trade. But remember what I was just bringing up, the CVD. This is what I'm talking about in terms of just understanding how much volume has come in on a particular stock. I absolutely, absolutely love the CVD. It gives you such an intuitive sense of how much volume comes in on something and if you're ready to accumulate. And obviously, we have a crap ton of volume that came in on SOXL right here. I put a lot of money behind this. It's okay if you don't believe me. I'm never here to say the things that that are egregious. I'm not here to say, I put a bunch of money in this. I have $500,000 in this, and look at me. I don't care about that. I care about you guys benefiting from astute observations and also technical and fundamental analysis that we do that I believe helps our traders. So that's what I'm trying to discuss here. Never mind the dollar amounts that sometimes I throw around. Don't focus on that. So SOXL definitely going to be something that I would recommend and that I think would be a pretty good long-term hold. So long-term hold for me is going to be between 6 months all the way up to a year or maybe even longer. All right. Let's see how much time I have. Oh, okay. So I'm doing good on time. And that was it. That was really it in terms of stocks. It looks like gold. Wow, man. Gold was an interesting short. Yeah, gold would have been a really, really interesting short. I haven't been paying attention to gold or oil at all. I've only been trading NQ. Only been trading NQ. Yesterday I did short the market. Yesterday was great, man. I got up at around 6 o'clock in the morning, and then I shorted NQ. I caught 320 points, man. And the bigger move right here, the bigger move was the rally, right? I just didn't catch that. Look at the CVD, right? The CVD tells you the entire story, man. It really, really does. So I definitely recommend it for you guys. If you guys just want more granularity, I would highly recommend it. And it's part of your TradingView subscription. So, for the 3 people that usually listen to me, if you're listening now, if you want to add this indicator on your chart, I absolutely love it. Okay, absolutely love it. So I caught this short position. I got in at 580, and then I rode that almost down to the bottom, man. This trade was just unbelievable. I caught 300. It was like 320 or 340 points, it was something like that, man. But just following the CVD, man, just literally doing that. And then I know a couple people in our group did catch the longs right here. I personally did not. I had my one trade and I was like, yo, 340 points. I'm done. I don't need to be overly greedy. I took my 3 contracts right here and that's it. That's literally it. Okay. What do we got going on here for today? So we're coming into, can you guys see this? Yeah, you can. We're coming into a fire line. So I'm expecting just a momentary pullback. So we saw Microsoft. Microsoft did very well for their earnings. We also have Apple and Amazon by the end of the day. In my opinion, I think that Amazon does very well for earnings. If you haven't noticed, this is just a pro tip that I'm going to throw out there. Whenever earnings expectations are revised lower, this is just a safeguard for the market not to implode, because normally the expectation is that we continually start to beat earnings quarter by quarter, but that's not how the market works. They've organized the market extremely efficiently. If you believe in the efficient market hypothesis, prices are usually quite fair the more liquid the market is. So in terms of where earnings is for the mega caps, we already saw that Microsoft beat expectations, but those expectations were revised lower. So it's just looking at things through a different lens so things don't implode. I think that Amazon is going to be the same thing. If you're in the group, I've signaled an Amazon position. I probably should talk about that. I'm talking about this like it's not a big deal, but it is kind of a big deal. This is a massive deal. I signaled Amazon when we were trading. I have a little bit of a secret weapon now that I don't really want to discuss on live, but the members in our group know what I'm discussing. I kind of want to keep this under wraps, but I know when the momentum shifts, right? So I'm having a better sense of when that's happening. So we got a good sense of that. We got a good sense when we were trading at 172. I signaled leverage shares on Amazon, right? I signaled to go very big on Amazon. I really did. So I got in here at $24, and right now we're up about $4.75. Can we fall? Can we fall significantly? Yeah, of course we can for earnings. Absolutely we can. We need to fall for this to be a problem. We need to fall 20%. So on Amazon, we need to fall for earnings anywhere between 8 to 12%. Can it happen? Of course it can happen. Absolutely. But our entry was so good. It was so good that I don't think it's going to matter all that much. I really don't think it's going to matter all that much. If it does fall more, I probably will buy more, right? I've been telling everyone, buy Google and buy Amazon as much as you possibly can, right? Literally as much as you can. The crypto people are buying into their crypto things. That's okay. That's okay. But I do want to be buying, I want to be buying the Mag 7. I have preference into which ones. Amazon was definitely it. So when we're looking at the upside from here, right, I got in at $24. I think this hits all-time highs, man. I think we're going to be hitting $50 later down the road, maybe by the end of the year, maybe a little bit longer than that. But I have a pretty strong conviction that we will be hitting $45 up to $50 somewhere here in the future. If we do go over the 1 year mark, I'm okay with that. I'm perfectly fine with that, holding on to the position for a little while and just going from there. I also have a position on Apple, and then I'll allow you guys to ask some questions. I usually like to open up the floor for you guys to ask as many questions as you like. I'm an open book, except for the momentum change thing. That's a little bit of a that's a little bit of a thing that we got going on for us. We have some momentum in the group, and I'm really happy to see the people that are part of our Discord benefiting from a lot of the strategies and a lot of the things that we're discussing. I'm really, really, really happy to see that. All right, so on Apple, when did I get in? I got in on Apple around 190, okay? So what do we got on 190? 190 is right here. Did I call the bottom? No, I didn't call the bottom. It's very difficult to call the bottom because you never know exactly where the momentum is going to shift. So I signaled a very large position on AAPU. AAPU, I got in, I believe I got in at $20. That's exactly what it was. $20. Yep, that's exactly what it was. $20. So right now we're up marginally. We're up $3.60. However, I do see Apple back up, or AAPU. I see it back up to 36. So that would be a 50% gain from here. Cool? That's all I got for you guys. If anyone has any questions, please feel free. Let me know what you would like me to look at, and I'll give you my honest opinion on it. I'll tell you what I think about it, or if I'm interested in it, not interested in it. Please feel free to ask me any questions. Let's look at TMDX. I've been asked about TMDX before. Okay. This had a huge breakout here. It's $70. So that's great. The only thing that I really don't like about it is, if you notice right here, I never like breakouts with low volume. That never is a recipe for me for something great. So right now, let's put it on this chart. Yeah, we lost momentum here on the top. So we have this breakout, but that volume is just not killer for me, man. I really don't like that. You can put on something on your chart. It's called an RVOL, relative volume, right? This is a very good indicator if you want to look for it's not, this script not working, but RVOL, there's several free ones. So I'm going to explain exactly what I see, right? Because I know how that particular indicator works. The relative volume per what we saw for the daily time frame, it's very low. I don't like that. So we're already losing momentum here on the top, right? It's very clear that we are. You're consolidating for right now. In my opinion, instead of looking for a long position from here, I would actually wait until you pull back to whatever area, XYZ area, and then you use some sort of a momentum indicator, right? If you use whatever one you want, you can literally use whichever one you want. But wait for wait for somewhat of a pullback, and wait for this to start picking up once again. So target areas for higher, I would say $120, but I would not be a buyer here. I think that the move has already been made. Okay. I don't like to get into moves after a significant trend or a significant breakout has happened. I've said this, and I will say this until they fire me at High Strike. It might be any day now. I'm not entirely sure, but I never ever like to take a long position after a breakout. I know some traders are like, wait for the 3 candles here, and then you see more momentum, and then you put. No, for me, the move is too late. So those areas that I pointed out, if you potentially wait for a little bit more of a pullback and then start forming a trend once again, whatever trend identifier you want to use, from there I would look to take the position. But right here, you're how many points too late? How many percentage points? You're realistically 35 percentage points too late. Cool? That's my opinion on TMDX. Does anyone have any other questions for me? I'd be more than glad to answer them if anyone has any questions. You can ask me about any stocks. You can ask me about any scalping positions or anything that I'm looking at for the day. No. It's not CBD. It's not. It's going to be C as in cowboy, V as in Victor, D as in Delta. So on the indicators tab, I'm going to share with you guys how to put this on your chart. CVD. It's a relatively newer indicator. This is something that a lot of professionals use. A lot of professionals use this. They don't necessarily use it as a standalone. They usually build it into an indicator or a script. They're not using TradingView. A lot of professionals are using they're using something that works a lot quicker. TradingView is if you build things on TradingView, you use PineScript version 6 now, but most professionals are going to build tools. I mean, we only have a very vanilla sort of version of things, right? They usually build in so many other capabilities, and that's why they use other platforms, because they can write in a different program and it can be very quick. But the CVD, the one that I would recommend, and the one that I've been talking about in a lot of my videos, is going to be the one that is the candles. So this is an editor's pick by TradingView, right? It has 3,500 people that are using it, which for me is crazy. It should be so many more. And it's going to be the second one, right? And this is what it looks like. It looks like it's copying the candles, but it's an oscillator, and it's a very granular oscillator. Whenever you are on the 0 line on your histogram, this is literally where you use your Squeeze Pro. This is usually where you're crossing that threshold, and then you're looking to take the trade and fire on the squeeze. Let's do a lesson, right? I don't think I'm getting too many questions, so I'm just going to do a lesson real quick, because I absolutely adore educating people on trading and investing. I'm obsessed with this stuff. So for me, I mean, it's an absolute pleasure to talk about these things. So let's go to Square. Let's go to Squeeze. So how is this different, or how does this give you different information than the Squeeze? Well, it gives you wider oscillations, and it's going to tell you how much volume is behind each particular candle. So when you're looking to fire on that 0 cross line, right, usually what we're doing is we're looking to fire on the squeeze and then take the position. Very often what you will find is that the squeeze is either a tiny little bit late to the move, or you have to take the move when you're oscillating from the bottom, okay? This is just observations that I have made. When you're oscillating off of that bottom, sometimes you have a decent sized move. Here just gives you a little bit more of a granular look inside of what each candle is doing. And it's going to accumulate. It's going to tell you relative to the last candles if it is a net positive delta or a net negative delta. So it also gives you what's called slope information. That slope information is very similar to how we read our charts, right? When we're looking at the chart falling, we're saying, well, it has inertia. It has inertia there going to the downside or going to the upside. So when we look at stocks, for example, I'll use Tesla, right? All of this has a lot to do with physics and calculus and derivatives. It has, I mean, stocks is all that. It's all about frequencies. It's all about that kind of stuff. So when we're looking at something like Tesla, right? If we want to see if there is a lot of buyers around something, well, I'm going to use the CVD. I can't really use the Squeeze Pro. I can't really tell how much buying or selling pressure is behind each candle, but I can definitely do that here with the CVD. It's just more granular information. It has a synergetic relationship with the Squeeze Pro. So when you have two things that are lining up, when you have the CVD starting to, undulate into the opposing direction, whether you want to take a long or a short, if you want to line that up with your squeeze indicator, you can actually take your entries a little bit earlier using the CVD. Okay. So everything in trading is all about timing. Trading is literally all timing. If you can get in one or two candles earlier on some of the higher time frames, you are at a significant advantage. Okay. And when you're doing that on the shorter time frames, your 15-minute, whatever. When you can get in just one or two candles earlier, then you are at a significant advantage. And that's what the CVD helps you do. All right. I can talk about the CVD all day. It seems like a simple indicator. It's not. It's magnificent in my opinion. I think it's absolutely magnificent. See how this follows the squeeze quite well. So you have that slope information right here, and then the CVD gives you that insight. Cool. Awesome. Let's talk about AMD. I'm so sorry. I spent a little bit of time explaining that. Hopefully I didn't waste anyone's time. I love just talking and discussing things about strategies, indicators. Man, I love that stuff. Let's talk about AMD. Where are we at on the daily time frame? Most of you know that I have a lot of money in AMD. I have a lot of money. I'm not even joking when I say that. I have people in this Discord that have well over $50, $70, $100,000 in AMD. And I'm not shy to say it. I think AMD is a buy. I think that it is 100% a buy. 100%. Okay. I see them being a front runner. I'm seeing what they're doing on the back end. I know what the stock market says and what it thinks about AMD, but it's not always about what the price is in the market, but what the fundamentals are saying, right? It's a classic Warren Buffett mindset. Classic. Sometimes the stock is going to pull back 50% or more in the case of AMD. But look at the fundamentals. Is the company growing? Are they investing in the right places? Are they allocating in the right places? Do they have the right technology? Are they possibly the next disruptor? The most recent disruptor was NVIDIA, right? NVIDIA literally was one of the biggest disruptors in human history. But is AMD is there on the coattails as well. Their technology, yes, it is going to be not AMD quality, but I mean they're literally riding behind that back. Okay, so in my opinion, I don't think that the stock price on AMD is completely reflective of the value that this company brings. Just my opinion. So I bought into a lot of this. I'm not sure if I'm comfortable to say in an open session like this for you to buy. I'm more comfortable talking about this in the Discord because I can be a lot more granular and I can talk a lot more about the specifics as to why I think this. But AMD, I have a crap ton of money in this, a lot. I think it's a buy. I think it's a long-term hold. In my opinion, AMD, even pulling back down to 80, I'm okay with. I will probably buy more. I'm looking at this as being a 2 to 3 year investment or possibly more. So long-term, I think it's a tremendous buy. Okay, tremendous buy. What else we got, guys? Does anyone have any additional questions? It'd be my absolute pleasure to answer them if you have any. I don't like Tesla. I haven't liked Tesla. I haven't recommended Tesla. I have not talked about Tesla. I have not said to get into Tesla. I'm not a fan. I'm not a fan at all. There's some people that were asking me to recommend Tesla as a long. No, I'm not going to be recommending a long on Tesla. If you read the earnings report and if you read the numbers, Elon Musk has been promising autonomy since 2016. Okay. This is not a company that I want to be behind. For scalping, fine. You can scalp Tesla all day long. I pointed out a scalp position on the 10-minute time frame on Tesla. You can scalp it all day long, but for investing, no, I would not recommend it at all, not even one bit. So I am not a Tesla bull at all. I don't like the fundamentals. I just don't like the numbers. The numbers really. I would prefer that you focus on Nvidia, or I would prefer that you focus on Amazon 100 times over on Tesla. That's just my opinion. You don't have to agree. But yeah, man, I'm sorry. No Tesla. Everyone's good? ANF is a pretty good one. Is it a good one? It used to be good, not anymore. I remember, holy crap. Why didn't I short this? Oh, wow. There's not much for me to say here, brother. You're not going to see me trade this or recommend this until we get back down to $33. But as far as momentum goes, I'm going to share with you two things. Momentum is still to the downside. That is not opinion. That is just fact. It is absolute fact that the momentum is still to the downside, right? Absolute fact. I'm not going to be recommending this. I have to look at their fundamentals. I have to see if there's anything there that is worthwhile. But as far as I'm concerned for a buy, no. If you're looking for further continuation to the downside, I would probably more than likely say yes. I'm going to say back down to $47. This is me just doing a topographical analysis. So I can't analyze something in 30 seconds. Some people think that I can. I cannot. I usually, on one stock, sometimes I spend hours analyzing something, literally hours, because I want to have a good game plan. I want to sharpen the axe for as long as I can. So when I go to execute, it's just literally a matter of executing my plan. So in this situation, the momentum is down. I would not like it for any buying opportunity at all until you get back down to maybe even lower than $48. Okay, so that's more my topographical view. Does anyone have any additional questions? Marvel is a really, really good one. There's a story in our group. I had a guy that opened up his business. He does penetration testing now. I signaled a position for Marvel earnings almost 4 years ago, and I said, let's put some money behind this because the risk reward was 10-1. He put down $8,000 on the earnings trade, and then he came out with more than $42,000, and he opened up his business. And now his business is generating over $300,000 a year for himself. We're still in contact, but yeah, that was a cool story. So every time I analyze Marvel, I remember him and I remember that story. So let's see what we got. All right, on the daily time frame, you have a lot going on for it. You really do have a lot going on for it. Is it a long-term hold? No, I don't think it's a long-term hold. In my opinion, you should be holding on to leveraged ETFs. CNBC is going to tell you something. If you ask your local financial advisor, they're going to tell you that I'm crazy and I'm out of my mind and I don't know what the hell I'm doing. That's fine. I have that criticism every single day of my life. That's okay. In terms of if you're looking to hold on to the position for long term, I'm going to give you a well-rounded opinion, just an opinion. On the 4-hour time frame, I would set a stop loss at $48. Okay, this is what I'm doing with my shares position. There's nothing different than what I'm doing it inside the Discord. If you want to buy it here at $57, that's okay. It's okay. Set a stop loss at the break of structure at 47 with shares. If you do that and then you start trading lower, then your area of interest is going to be closer to $37. Okay, those are just 3 areas that I would recommend. In my opinion, if you're looking for further momentum to the upside, pay attention to what the squeeze indicator is telling you. The squeeze indicator off of the 4-hour time frame tells you that the move has already been made. I have a tool, right? This tool is awesome. The tool tells me if the trend is starting to lose momentum or if we're starting the trend. That's what it's for. The trend started about at $52. Obviously, right here, it picked up. You probably would have entered on that candle if you're trading the way that we're doing inside the Discord, but that's nor here nor there. Is this a buy opportunity at this time? I would say that you missed a lot of the move, and I don't like that. I don't like that for anyone. I would prefer that you focus on where the move still hasn't happened and where you can get some explosive price action to the upside, similarly to what I was talking about on SOXL. So is this a buy definitively? Well, if you want to buy for long term, my stop loss would be 47. But Sage, that's crazy, man. You're asking me to hold on to the position for a 20% drawdown. Yeah, yeah, that's what I'm saying. But what is the upside from here? 20%, it always depends on what your upside is. If your upside is all the way up there for 45, maybe 50%, what is your risk reward? It's more than 2 to 1. So this trade actually makes sense. Mathematically speaking, it should make sense. So would you buy here? I personally would not. I would wait for a little bit of a pullback. I would say an intermediate area would be between $52 to about $57. I think that's gravy. That's what I would wait on. Now for upside overall, if you're thinking this trades back to 110 or let's say $100, I think that this is magnificent. I would prefer being allocated in NVIDIA or AMD personally, right? So this is more small fish. This is focusing a little bit more on the smaller fish, but this company is also magnificent, right? You shouldn't be ignoring this company, and we shouldn't be ignoring Micron either. So those things I would say that you should take into consideration. Whenever I say something like buy shares, and I'm saying, if we're in a drawdown of 30%, which we were on TECL, I had a guy in my DM. He was telling me, yo, I'm down $220,000 on some of these shares positions. And I'm like, holy fuck, man, that's a lot of money. But I was like, are we focused on how much money we're losing, or are we focusing on risk reward? Today, we're going to be talking in my DMs. You don't have to believe me. It's okay if you don't believe me. But today, we're going to be talking in my DMs, right? He was in TNA, he was in TECL, and he was in some other positions. Look at some of those positions that I was just talking about, right? I told you what my entries were. I told you what my entries were on Amazon, and I told you what my entries were on Apple, right? He's not going to be so disappointed when we start rolling in the right direction and start picking up that momentum. So think about those things, right? I'm giving you a long answer, but it's not just about the level. You have to think about the game plan, about what's going on in the ethos. You have to think about what's going on and how to apply risk reward on the decision that you'll make here for Marvel or whatever stock you want to play. Tesla is a really good example. There's a cat that just asked me about Tesla here. The cat was asking me about Tesla, and he's saying, all right, we're going to see a breakout here. Well, I don't know if we're going to see a breakout, but I can tell you definitively that there was a substantial move that was made off of 225. And that 225 from here, buyers already saw the trend. It had a 27% move. So why am I going to be buying here, waiting for the breakout? This is what the majority of retail traders are looking at, right? Retail traders are going to be taught, and I talk about some of this stuff as well, some of these concepts, but playing the breakout right here. But you're on your 4-hour or your daily time frame. Why do you think that there's so much buying pressure here? Look at what your CVD is telling you, right? The CVD is going to help you tremendously in identifying if the buying pressure is still there. Do you think there's a lot of buying pressure up here? No, there's not a lot of buying pressure. The Squeeze Pro is not going to tell you that. The CVD will, or the relative volume index is going to tell you that as well, RVOL. It's going to give you some insight. So if I'm looking at Marvel or Tesla, I want to consider those things. I want to have an exit strategy, right? It's very important, right? In Tesla's situation, I probably would have an exit closer to 255. The upside is very good on Tesla, but if you understand anything about fundamental analysis, you want to jump ship. You're like, no, bro, I don't want to be allocated in Tesla. My opinion, right? It's just my opinion. Now let's go here to Marvel. Sometimes people ask me three-worded questions, and I give them 30 minutes of an explanation. That is my toxic trait. Like that, I have to work on. I have to work on my psychology. But I mean, I like to think about these things through, because when I take a position or recommend something, it's not $20. It's usually not $20. So think about those things. If you want an exit strategy that's a little bit closer to the chest, I would say probably $54, right? But that's my overarching opinion on what Marvel should be. So take that for everyone's listening, for the two people that are on this call. Everything that I just said, don't just apply it to Marvel, but apply it to all of your stocks or your trading endeavors. Cool. It's not about the one stock. It's about thinking about that ecosystem of all the decision making that you need to make when you're investing or when you're trading. Cool. All right, what else we got? All right, I gotta pay attention into the group here. Is everyone okay? Did everyone find some value here for today's session? If you did, give me a thumbs up. And yeah, I'll see everyone. Actually, I'm gonna be in Europe for the next 2 weeks, so probably you guys are not gonna see me for probably till mid-May. Okay, you will see me in the Discord, but you're not gonna see me here on social media. I'm gonna make a couple videos. Maybe I'll show you guys my trip in Europe. But as far as that, I really hope that all of you are healthy. Everyone is taken care of. I hope that all of you are making a little bit of money in the stock market now that we're starting to recover a little bit. But keep a level head, right? We're still not above the hump overall. We have a lot of upside to see, but we also still have a lot of headwinds, okay? All right, guys. I appreciate you. Thank you so much. Everyone have a wonderful day, okay?